multifamily alternative investing, especially, is not traditional at all.
Right.
You start to think that way once you go to networking events and meet a lot of different people who are in this space. Go, man, everyone knows about this. But then 9 out of the 10 people I talk to just in my network outside of that have no idea that private investments exist.
Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
Welcome back, investors. Today I have the pleasure of interviewing 𝐿𝐞 Grieshop, founder of Rule 72 Equity. Welcome to the show, 𝐿𝐞.
Thanks for having me, George. I had the opportunity to listen to a lot of your episodes with awesome guests, so it's a pleasure to be here.
Oh, fabulous. Been looking forward to this for a while, and I wanted to ask you about how you got your start in real estate. I know you've done some different things, including, I think you've got some houses in the Midwest.
Yeah. So that's where it started. I believe the first purchase of my first single family rental home was in 2018, and it was in the Columbus, Ohio market. I got my start there while I did live in Arizona and invested out of state because I'm from Ohio, and then I knew a realtor who was a friend of mine from college who lived in Columbus as well. Shortly before that, I found bigger pockets and did a deep dive on real estate investing and bought my first turnkey rental. I didn't want to waste any time and just wanted to get started. And then that led to a couple more houses that him and I did the BRRRR strategy on together. And today we own 4 doors together in the Columbus, Ohio market.
Oh yeah, who's that partner?
His name's Ryan Krempley.
Oh, cool.
Yeah.
Well, hey, how many R's in that BRRRR strategy? It's a little controversy.
Yeah, so I do buy, rehab, rent, refinance, repeat. So I'm 4 R's.
Okay.
And I think that's the traditional one, but I think I
Right.
remember you mentioned there was there may have been a 5th one that some people were.
Well, I feel like, yeah, some people it's like, rehab, refinance, rents, repeats. Anyway, but that's the place to be if you're doing that BRRRR strategy, because of course that was Brandon Turner who got that started. What a great article, and what a great place to learn.
Yep. Yeah,
Awesome.
fantastic.
Well, yeah, and you've been a sales leader. I think that's what you're doing now, in addition to founding your capital corporation, Rule 72 Equity.
Yep, correct. Yeah, so I started off as just a individual contributor in my sales career, and then did that at my first position, which was at Yelp, which I'm sure a lot of your listeners are familiar with Yelp. And then once I actually started to work for a tech company that's in the multifamily space called Apartment List, and shortly after joining them, moved into sales leadership and have been doing that for about 5 years.
Yeah, cool. So a mindset shift when you're going from sales to a leadership position. So tell me what you learned from that shift.
I learned that just because you're a really good salesperson, or insert whatever career you're in, those skills are an entirely different skill set oftentimes than management skills. The ability to manage people, deal with people, try to cast a vision, and lead on that vision. Managing people is really hard, is what I ultimately learned. But I think that if you can empathize, you're a good listener, and again, can get behind what your company is doing, then a few of those components really help out.
Cool. And then from that, I know that you had a lot of skills that you were able to transfer, I'm sure, into the world of capital raising. So tell us how that worked out for you.
Yeah, so still somewhat early on in my journey of capital raising and kind of fund management, but I think that communication, honesty, and integrity, all of those things about it, that aren't even necessarily business skills, right? They're just life skills. I think those are the most important things that kind of transfer over here. And leading from, as it relates to sales and really entrepreneurship and leadership, the kind of leading from a place of just education as opposed to I need to sell you on something is the approach I've always taken, and it seems to work out well. because that a lot of times a confused mind doesn't buy, and you just need to be the one to educate them, and help sort of lead them down a path that they've never been down before. And if you can articulate what that looks like, then people are a lot more comfortable in moving forward.
Yeah, absolutely. And I think, not being a sales guy myself, but my impression is that we live ever more in the age of the soft sell. Hard sell, that's
Yeah.
the old way, right? And especially when you're talking about, like you said, this sort of a huge transaction, so much more the case.
Yep, 100% agree. I think the world of multifamily alternative investing, especially, is not traditional at all.
Right.
You start to think that way once you go to networking events and meet a lot of different people who are in this space. Go, man, everyone knows about this. But then 9 out of the 10 people I talk to just in my network outside of that have
Nope.
no idea that private investments exist.
Yeah, it's great. Yeah, it's very important. That's why we do the show. And we'll definitely talk more about your other alternative assets. I think it's very important to get the idea that there's just so much more out there, and it just takes just a little bit of effort. For a lot of people, to self-directed IRA. For many others, it's just even knowing that these things exist and what sort of a vehicle you need to get into. Well, now you've done a couple of capital raises, I think, already. Could you tell us, how does capital raising compare to the sales? So you talked about the integrity and the importance of bringing people along and not really trying to sell them too hard. But I imagine those skills have got to be very valuable. I mean, you've got to be out there marketing yourself. Any big tips you have for people who are would-be capital raisers?
I think that a few of the things that really transfer. So I come from, my initial job in sales training was at, as I mentioned, Yelp. And that was a high cold call environment. You were literally picking up the phone 60 times a day, making phone calls to business owners who had no idea who you were and trying to sell them on advertising. That world is so much different than something like capital raising, because you tend to start off with your friends and family at the beginning, and getting those conversations going is a lot easier. And once I got out of that kind of realm of my network, I'm now moving into people that I may have had connections with in the past, but haven't really stayed in touch with as much, and revisiting conversations with them. So just having a very genuine, from the heart approach, I think, is the best thing. Like, hey, I started this company. Here's what I've been up to. Here are a few investment deals I've done. You can see it clear as day. Here's exactly what kind of my experience looks like in this space. And I'm curious if you would like to know, if you would like to learn more. Here's how it's helped me. Would you be interested in learning more about this? And if not, no pressure at all. I always end my kind of cold outreach, if you will, with, there's no pressure with me at all. Like, I'm here to educate you. And if at the end of our 20-minute conversation, this isn't a fit, then we both go our separate ways and get on with our day. It's no harm, no foul.
Yeah, that's great. And perfect point about letting people know the journey you're on. You can't just let people think, hey, I'm still Luke, the sales leader. You're more than that now. And if you don't let people know that, then they have no way to really start to get on board. And it usually is a long process. People don't go from stocks and bonds one day to, hey, let's invest in a real estate syndication, usually in a day or an hour. It's more like a week, month.
It's a long time.
6 months.
Took me like a year plus. Yeah.
Yeah, absolutely. Yeah. So very, very important advice out there. Just let people know what you're doing and just bring them along for the ride. All right, great. So yeah, you've gone through 2 capital raises already, and looks like that's what you like the best, because I know you're looking to start a fund. And then in that point, you can really just do what you like best. You can just raise capital. Somebody else operates the property. Beautiful life. Nice work if you can get it.
Yeah, exactly. Yeah. So the longer term vision, as you and I have discussed before, is multifamily sort of the bread and butter today. It's it's the asset class I've done the deepest dive on. It's where I form the most relationships, but I love diversity and anything real, right? Real assets that can produce income, because that's truly investing. And would love to diversify into different things in the future outside of just multifamily.
Well, I love the fact that you mentioned that it's real.
Yeah.
That's something that separates this from paper assets. And I think that's very, very important. I know that you love economics, and you have a great quote. I forget who it comes from, but as an investor, I'm just going to paraphrase this. As an investor, economics is a sea upon which your boat floats.
Yep. So that's from Russ Gray. And I spent a year in the syndication mentoring club with the real estate guys. Incredible experience. Met so many fantastic people. And I would highly recommend it to anyone out there who is interested in the business of syndication and investing. What I learned from the real estate guys when I went to my first event, Secrets of Successful Syndication, is that syndication is its own business. If you have an interest in investing and you bring a complementary skill set of something like sales or networking or marketing, and you want to marry those two, it's you can create a real fund management or capital raising business around those things. And with the real estate guys, they teach so much more than just this is a multifamily asset, or this is a piece of real estate. Here's how you evaluate it. Here's how you evaluate a market. They go so much deeper into different types of asset classes. And then, as you just mentioned, the economics, I learned more about economics being part of their mentoring club in that 1 year than I did in probably my entire life before that.
Yeah, well, they're great at that too. And I want to say it's Robert Helms is the one that I've seen going out giving those amazing presentations about housing economics. Love it. And talk about an experience. I know those guys do put on an experience. They've got one they do down in Belize. Is that the one you went out to?
So I've never been to I've heard nothing but the best things. That's their investor summit on sand, I believe it's called, and the Belize trip they do once a year.
Yeah.
And
on sand and water, right? Don't they get a catamaran?
I think so. Yeah, I think you're right. Everyone in the group I've talked to, though, it's a phenomenal experience, and you get to rub elbows with some of the biggest, heaviest hitters in the space.
Yeah, well, that's on my list. I go to some pretty good conferences, but I have not gone to anything in Belize. Nothing on the sand yet.
Yeah, one day.
Right. Well, I'd also like to ask you about your experience as a passive investor, because I think that's very important. I think these are like the right hand, the left hand. You really don't get anything in this business without both. We need both. And I know you can give us a lot of guidance for that. I want to say that you've done at least 4 multifamily investments as a passive investor, and you've also got a 30-point checklist. So is this what we get if we come out to your website?
So I don't have this publicly posted on my website. However, if someone reached out to me directly, I'm happy to share it. It's just luke@rule72equity.com. Basically, why I decided to make this checklist outside of just for my own sake is I need to be providing bulletproof investments, bulletproof in air quotes, no investment's perfect, but really highly vetted, have done my due diligence on all of these opportunities that I bring to my investors. Because frankly, I actually made this 30-point checklist and hired third-party underwriting, which I'm also happy to talk about.
Yeah.
After I was an LP and when I decided to go into the space of capital raising, because as any capital raiser should, you're treating your investors, a lot more highly with their dollars than you would your own. The 30-point checklist that basically just covers a lot of different areas in the common 3 components of the sponsor, the market, and the deal. And so when it comes to the sponsor, I look at track record, the number of full cycle deals they've done, the years of experience, so on and so forth. And then when it comes to the market, the things like population growth, industry allocation, job growth, median household income, items like that. And then for underwriting, I have components that I look at specific to underwriting, but what I actually do is partner with a third party or a person I know to really fully underwrite the deal for me. And then we have about a 30-minute to hour conversation on the deal if they see any red flags.
Yeah, and I love the way that you do get that third-party underwriter. I think that's very, very important, because every deal I go into, look, I'm going to underwrite it, because if I'm putting my money in as a passive investor and I do that from time to time, it's just as if I was an active investor in that deal. The only difference is that I'm not putting my reputation on the line. That's still my hard-earned money. And I'm going to treat that every bit the same as if I was going in as the operator. I want to see everything, right? For me, yes, you nailed the 3 big things. You have the operator, you've got the market, and then you've got the deal itself. And I want to know about all those things. I like to see their underwriting. I underwrite it myself. I like to see the rent comps, nicely done. I got to say, listen,
Yeah.
I'm going to go on a soapbox for a minute. I think the one thing that our industry doesn't usually do very well is comps, right? You get your comps from the broker and it's rose-colored glasses. But even sometimes in some of these slide decks, it's a little bit difficult to tell. Very rarely do you get enough information about those comps that I can say, oh yes, these properties are actually comparable. I do believe I can get these rents. So a lot of times I'm actually going out there and pulling my own comps. Well, what do you want to add to that? So you got your 30-point checklist. We talked about the three big things. Those are the three overarching categories, but can you give us a couple of points on that checklist?
Yeah, any specific areas that you think the listeners would benefit from and seeing
Oh
the
gosh,
specific
I don't
points
know. I mean,
of
you
the
already
three
did, I think, mention
categories?
a couple because you got to know the operator, and that's the most important thing. People say bet on the jockey, not the
Yeah,
horse.
yeah,
The horse, of course, being the deal, the jockey being the operator. And when you're betting on the jockey, you mentioned that you want to know how many deals they've been in, how many have gone full cycle. You want to know their returns, things like that. I'll give you one for my list, which is tell me about a deal that either went bad or sort of went sideways. You're in a difficult position. Tell me what you did to get out of it. And you learn a lot about people from that. I mean, to say, hey, I never had a deal that I lost money on, or even one that was difficult. I mean, come on, you overcome hurdles
exactly.
every day. And just hearing how much candor. I mean, you can tell a lot about a person's integrity. Ask them a difficult question like that, and do they clam up? Or do they just take an opportunity to show their human side?
Yep, 100%. I have that. What's something that's gone wrong in a deal on the checklist? And I agree because it speaks to experience. I'll share two from the sponsor category that I think often are overlooked just from LPs. One, background checks. I think background checks can be extremely beneficial because again, it comes down to the integrity of who you're investing with. I don't have a specific scenario, but I've definitely heard stories out there of people who of operators who, committed fraud and then would literally go to a new market and just establish a whole new network. And people don't really think about that. They just go off of maybe a 30-minute or hour conversation they had with the operator. So I think background checks are really important. And again, something I implemented after I started to raise money from other people.
Right.
And then a succession plan as well. If you're dealing with a team of two people or one person, especially, it's like, hey, I hate to ask this, but if you get hit by a bus, what happens to my investment? What happens to this property?
Right. Well, I'll tell you, and this might be the perfect segue into those alternative investments that we were talking about. But what I've learned from angel investing, when you go into an angel investment, if you are going to lead the round, you might have to put in, 200 hours at least minimum of due diligence. And that includes things like the background check, which people do overlook. A lot of times you'll find there's a partner on the deal, and particularly with an angel investment, this early stage companies, and well, where's Fred? Fred hasn't been with us for a year. Well, wait a second. He's a key part of the team, the technology, what's going on, kind of like you're mentioning with the succession. But the other thing is to verify everything. Now, maybe it's a little harder with real estate to fake it, but particularly when you're investing in a company, making sure, well, hey, what precisely is your patent position? You say you have a contract with these 5 key players. Show me the contract. What's in writing? And those are sorts of things that people skip over, they forget. And again, you can go on Google, you can verify the building exists. It's not too hard. Could have burned down yesterday, but you can verify at least that there was a building at that location. But people are forgetting some of these very basic things. And even some of the very best investors like Benjamin Graham, for those of you listeners that may not ring a bell right off the cuff, this was Warren Buffett's mentor. And Benjamin Graham once invested in a company that did not exist. And he wasn't the only smart investor that got fooled. So I hate to say it, but I think that's pretty much how people learn. You learn by either losing money or you get a deal that sort of went sideways and you lose time.
Yep, that's right. Yeah, when you mentioned that about investing in a company that didn't exist, I thought about the Madoff series on Netflix, which I highly recommend everyone watches. And
Right.
they were just creating transcripts from one of those old. I wasn't around when these things were around, but no verification really done whatsoever, just sort of trusted him. He was a big name. That's another thing, right? Like people just have a certain reputation. You trust, well, everyone else sort of trusts this person. So I think the quote is trust but verify.
Correct. And since you mentioned Madoff, I know that one of the things that should be another red flag is consistency of returns. Now, we all like to see consistent returns. And if you ask Warren Buffett, what are some of the top reasons he'll invest in a company? He likes to see consistently growing equity, and he also likes to see consistently growing earnings. But when they're 20% a year, every year, really, wow,
Yeah.
That's amazing, Bernie. How do you do it? How do you pilot the ship so smoothly? Well, that's a real red flag. So when
Yeah.
you see that, you might want to ask more questions. What's really going on behind the scenes? And I've heard about the regulators showing up at Madoff's place and they had to print out transactions that they supposedly did. Well, it's still hot from the printer, so they're throwing it back and forth. Right.
Yeah, I saw that too.
It's not, I mean, to look at it from the human perspective, it's kind of funny to see human foibles. It's not funny that people lost their money. I mean, these were real people that either had a blighted retirement, had to go back to work, or their legacy to their children was completely lost after all that.
Yep. Yeah, sad.
Yeah, terribly sad. All right, well, I'll go back and pick up a little bit on the economics because I know you love that. And I think that's very, very important. It's one of the things that I hit. As you know, I'm the data scientist of real estate. What I love to do is go out and educate people about that because I think, hey, it makes it a little less scary to invest, but it also, hey, to be foreknowledge is to be forearmed. So the more you know, the better off you are. You don't want to go into battle with no armor. So Rule 72 equity, I got to say that's one of my favorite things because I believe that if you understand things like the Rule of 72, which in case there's anybody out there who doesn't understand what that is, just take 72, divide it by your rate of return. That's roughly the number of years that it's going to take for you to double your investment. So if you're getting 5%, then it should be about 12 years. If you're getting 12%, it should be about 5 years, right? And keeping those sorts of things, actually, I think I did that wrong. Sorry, okay, back that up, Shina. Let's redo the math on that. So yes, if you get 12%, it should be about 6 years. If you're getting 6%, then that's going to take you 12 years to double your investment. And I feel that knowing these basics really, really well is more important than mastering some of the more advanced material. If you know things like the Rule 72, you can sit down with somebody and you can see, just how onerous is this loan. If you can go back and calculate things like, the mortgage factor, et cetera. What does this cost? Interest only versus an amortizing loan. When you have those sort of things in your pocket and you're sitting down at the table and you've got that fast talker who's trying to get you signed on the line, it can go either way. When you're able to calculate these things really quickly and do these back of the envelope calculations in your mind, puts you at least 3 steps ahead.
Agreed, 100%. And I think a lot of it, like one, and naming a company is not easy. I learned that. And two, one of the reasons that I really like this rule of thumb and why I named the company after it is because cash flow is extremely important to me, which we can talk about. Passive income, very, very important, but also growth investments. I think that everyone, like the hot topic, the hot button all the time is passive income, passive income. There's the big FIRE movement, financial independence, retire early with passive income. And all of that is fantastic because it provides flexibility. But at the end of the day, you got to look at the long term as well and look at the growth of your investments as opposed to what's just being put in your pocket on a month basis.
Yeah, outstanding. Cash flow is wonderful, but you've also got to look at the appreciation amortization, all these other things play a significant role. Great stuff. Well, let's go into those other types of alternative investments, other ways as you get passive income or maybe act as a hedge against inflation. So I know that you've invested, I believe, in 2 ATMs, some land in Colorado, and gold. So tell us about why you picked those alternative investments and what can you tell us about those asset classes?
Yeah, so the first two that you mentioned, was the reason that I picked those is actually for the passive income. We hate to admit it, but multifamily, the cash flow has gotten pretty squeezed over the last few years, and generating a 6 to 8%, whereas maybe a few years ago it was like 9 or 10%.
Yeah.
So I was looking for alternative ways to invest for cash flow. And so ATMs, in case your listeners don't know, there are funds available to invest in ATMs for accredited investors. And the cash on cash returns per year are somewhere between 20 and 25%. And people start to look at, like, as you mentioned before, the consistency, and that starts to sound a little funny. Like, why doesn't everyone do this? Well, when you consider it on an IRR basis, internal rate of return, it's not too far off from your multifamily deals. It's just a different way to earn your compensation back, to earn your investment back, right? As opposed to maybe getting slightly smaller distributions year over year and then a big pop in year 5 when the deal goes full cycle. With an ATM investment, you're just getting larger chunks of that cash flow on a 7-year time horizon with no large liquidity event at the end or no sale. So I wanted to diversify into something like that, but as you talked about before, something that was still real, something I could see, touch, and feel. It was tangible.
Right. Well, hey, let me ask you some more about those ATMs if you don't mind. Because those are interesting. And yes, they do all tend to have that 7-year cadence. And I believe that's because of the depreciation, is it not? After 7 years, you've used up all the depreciation. And so that's why they end up replacing them. At that point, you're paying 100% taxes on your profits. Might as well just say the jig is up, kind of put a new one. Of course, they break too. I mean, I was at my ATM the other day and it needed service. So that was kind of inconvenient. So very interesting and great point about the no pop at the end. It's all what you're looking for. You got to have some discipline if you're investing in ATMs, knowing that there's no pop at the end. Hey, what are you going to do? You better be reinvesting some of those dividends, or you better have some other investments. Don't invest all your money in ATMs.
Exactly. And yeah, I listened to Jeremy Roll recently talk about ATM investments and how he got out of the rat race in 2008. That's one of the pieces of advice he gave, as well as, if you're a full-time investor only living on passive income, well, be mindful of an ATM investment where you're not going to get this big liquidity payout, payout at the end. And correct your point about using up all the depreciation. There's no debt on the ATMs, which is awesome, because then there's no recapture at the end with a liquidity event or sale. So yeah, you're using up all the depreciation, which in turn really increases your returns as an investor as well.
So tell us about that land in Colorado. You mentioned that's cash flowing. That was going to be one of the questions I was going to ask is, I know there are ways to make land cash flow, but how are you making your land cash flow?
So through the Syndication Mentoring Club, I made a connection. His name's Jamie. Jamie runs a land wholesaling business. And basically his business model is finding off-market undervalued land, doing a cash offer for that, and then turning around in a month or two and either selling it for a cash offer and then paying back his investors, or selling it on seller financing terms, which is the plan with this most recent first investment that I made with him. So say we buy a piece of land for $10,000. It's really worth, let's say, we could resell it on seller financing terms for $20,000 on a 5-year period. Just as an example, these probably won't be the exact terms he goes through, but then monthly over the next 5 years, you're still title is you hold title of the land in your name, and you're doing seller financing to a new buyer and earning that passive income every single month. So that's sort of the business model he goes with. I'm not the land expert. I just partner with other people who I know, like, and trust and believe in to kind of execute on that business model.
Right. Well, holding the title, that's important if you want to do a 1031, for example.
Yep.
Yeah.
That
So
as
quick
well as for
primer for people out there wondering about 1031s. You can 1031 into a syndication very easily, but not out of very easily. Usually got to put in about $500,000 and you got to get tenants in common, Delaware statutory trust or something that costs a lot of money, takes some time for the sponsor. Usually sponsors only doing that for $500,000, but good to remember that whether you actually own a direct piece of that title like you do or not makes a huge difference down the road in what you're able to do. Well, I thought you were going to mention my favorite way to make land cash flow, which is just you're just going to lease it to somebody like a farmer, for example. And that's a direct way to make it cash flow. But yeah, selling on seller financing, another great thing. So yeah, gold. I mean, I think everybody knows what gold is for, but just tell us why gold.
Yeah, so gold's just a big inflation hedge, and it tends to hold its value. So those are the big reasons for me buying it. You know, it's been the oldest form of money for thousands of years. I don't see that changing.
Do you tell me these
soon.
greenbacks, they're not going to hold their money?
Right, exactly. Yeah, they'll hold their value over a long time.
Watch out. Woo.
With everyone, you know, with the dollar being printed into oblivion. I needed to do something different just in case things were to go south.
Yeah, tell me about it. Well, yeah, and again, it's not a productive asset. It's not going to cash flow.
Right.
Don't expect it to appreciate, but as for holding that store of value, it's great for that. So how are you investing in all this stuff? You have a self-directed IRA?
So one thing I would say is my wife and I have been, you know, grateful to be pretty high income earners through our sales careers, and we live well below our means. I mean, we live in about 1,000 square foot house and drive one car, and life's great. You know, we wouldn't trade it for anything. And all of that money that we save, you know, we still have some of the traditional things to diversify, 401ks for tax benefits and all those things. And I probably will convert that to a self-directed IRA at some point. But for the most part, we've just been very diligent about saving our money and investing it.
Yeah, that's the way to do it. And if you're out there wondering, how do you become wealthy? And there's really only one way. You've got to live below your means, because if you're spending what you make, guaranteed, that means by necessity that you're living paycheck to paycheck. And no matter how much money you have coming in, you know, you can't live off the equity in your home, right?
Yeah, exactly.
I mean, you definitely need some cash flow. Definitely need to live below those means, invest some. If you don't find a way to make money while you sleep, you have to work till you die. Sad, but it's true.
Yep, that's right.
Well, before we head into our rapid fire round, I just want to ask you one more question. I know you are a high performer and everybody's got a hint or a tip or a secret. So what's your number one productivity hack?
Ooh, productivity hack. I'll try to, I'll try to share. I don't think there's anything groundbreaking, but one thing that's worked for me is just, sticking to the calendar blocks that you put on your calendar and being relentless about protecting that time. And, we just had our first baby about a month ago. And so life's changing for me. So any type of hour that I get free, I have to be really diligent about sticking to the priorities and the most important things I need to get done on that calendar. But just utilizing your calendar in general, putting things on there, and again, relentlessly sticking to it. And
yeah, calendar blocks are amazing.
Yeah,
good
I would
stuff.
Say productivity wise, that would be my number one.
Beautiful, and it keeps you focused on the most important thing, which is the most important thing. Mm-hmm. All right, great. So this is where I like to spin into the rapid fire round I call the 7. Luke, are you up for it? Are you ready?
Let's do it. I'm ready.
All right. So if you could be known for only one thing, what would that be?
Being selfless, someone who puts myself last.
What is the greatest lesson in leadership you've learned as an entrepreneur?
I would say being proactive in communication to your team and your clients, even if there's a shred of chance that what you're considering actually matters or will impact them, you should still be proactive and tell them. Setting expectations.
What personal characteristic has been most pivotal to your success?
Persistence.
All right, great. So we're going to take a nod to the randomness of the universe. Got my random deck of cards here. Just tell me when to stop cutting.
This will be fun. Stop.
All right, here it is. Top cards. What would you most like to learn how to do on a computer?
Oh, wow. That's a really good question. I want to be thoughtful in my answer.
Well, I can just give you mine while I'm
Go ahead. Go ahead.
Yeah, Google Ads. I want to learn that really well. I actually hired a freelancer to help me with that. $30 and going to take a look at my ad campaign, figure out how we can speed that lease up. Yeah,
I love that.
Knowing how to do that myself. But then again, if it's only $30, maybe I don't need to learn it. But
yeah, that's true.
Learn what I can. Okay. All right. So your answer, Luke, what do you want to learn most how to do on a computer?
I would say, as it relates to my business right now, because this is a challenge for me, is just automating social media content and newsletters, stuff like that. Just kind of the full suite of marketing in the most automated fashion while keeping its value, right? Because
100%.
sometimes
That was my other
outsource these
freelancer
things
this
and you
week.
lose your
Set up my active campaign. I haven't
Perfect.
looked at this for a while. We need to redo this. Okay.
Yeah, perfect.
Can you name a book that's helped to forge you as a leader and as an entrepreneur, and why?
A book I've picked up more than one time is Grit by Angela Duckworth, and I highly recommend that one. It's all about passion, consistency, and persistence, and how that trumps simply being inherently skillful at something.
Love it. I feel like she's telling us the things that we already knew, but I don't think anyone has said it as clearly nor given us the quantitative approach. She's showing us just exactly how important these things are. And what a great read. I love that book. Okay, so then what is the biggest hurdle you've overcome in your business in the last year? And tell us, what has it taught you?
Oh, the biggest hurdle, since I'm just starting out, I would say the biggest hurdle has just been getting in front of potential investors. And I was reminded last week by a friend I spoke to that I just simply have to go back to my sales roots and do a lot more cold outreach rather than allowing investors to come to me through social media and newsletter efforts, right? I don't think that anything trumps cold outreach and staying persistent behind that.
100%. The person who reaches out to me when the question is on my mind got a great likelihood that's who I'm going to go with. Beautiful, beautiful point there. Now, I'd like you to send us out with a quote to help forge our listeners as leaders and entrepreneurs.
This one is more of like a, Buddhist quote, but it's one I love. The harder you look for happiness, the harder it is to find. And I think that that's an important one to remember because we all stay heads down, building a business, trying to get to the next thing, trying to, execute on this vision that we have, when we have to look at how far we've already come and, and respect that journey and be happy with the results we've already created.
Yeah, deep wisdom there. Yeah, absolutely. Happiness is not something you can pursue. It's something you have to choose.
Yep.
So yeah, life may be a journey, but happiness, I think, is just a destination. Realize you are there.
Love it.
Well, let's wrap it up by letting people know, how can we reach out to Luke? And if you want to invest with Rule 72 equity, how do we do that?
So you just go to my website. Pretty much everything would be there that you would need, rule72equity.com. And then I'm the most active on LinkedIn. You can just find me by my name, Luke Grieshop, or Instagram. I post a lot of stuff on Instagram for my followers as well. So any of those three outlets.
All right, outstanding. Thank you so much for taking your time to share your knowledge and expertise with our audience.
Thank you, George. It was great.